Hey, Dylan Weston here. Today, we're going to be learning about one of the most important concepts in investing, which is understanding moats. Moats is a concept popularized by legendary investor Warren Buffett. This is perfect timing to learn about moats, as just today it was announced that Apple is coming out with their very own buy now, pay later feature. So all of the buy now, pay later stocks, like Affirm is a good example, it's down 5% on the news. And what we're going to find out is these type of companies, they don't really have a very strong moat. So to understand this concept, let's jump onto the computer and let's visualize it. Now, a company is very similar to a castle. Like imagine we're living in medieval times, right? Because it's quite a ruthless place. In capitalism, there's a lot of competition that's coming to kill you. Now, what you want to see in your company is it needs to have a very strong moat. And what is a moat? It's just the water around the company. This acts as your defense. So you want to have a very strong moat, and inside your moat, you want to have things like alligators and I don't know, sharp objects that can hurt the opponents that are coming to try to come in and take you down. The first moat that comes to mind for myself is brand moat, because brands can dictate what products we buy and how we spend money. As an example, let's imagine we have two companies, company A and company B. Now, both these companies are selling a very similar product. It looks pretty much exactly the same and is at the exact same price. So there doesn't seem to be much in it. Now, the question is, which product do you buy? Let's say that you're familiar with the brand of A and that company has been around for like 50 years. And then company B, you've never heard of that brand because it's a brand new company. Most likely you're going to purchase the product from company A because a certain amount of trust and reputation has been built between you and that brand. Because if you have had good experiences with that company in the past, then you'll be thinking, hey, in the past, all the products and services I have bought from this company have been pretty good. And with this other company, I'm not too sure about. So it's a bit of a risk to go with company B. So the way that I visualize brand moats, it's kind of like thinking about a big invisible magnet. So as a company improves its reputation and branding, it increases the size and strength of that magnet, which is attracting dollars. So the next type of investment moat to understand are secrets. So you can think of like the secret recipe of like Coca-Cola, or you can think about like the secret herbs and spices of Kentucky Fried Chicken, or another type of secret is something to do with like the actual business model itself. In that case, the company that comes to mind is McDonald's. It's not a burger company or a fast food company. It's actually a real estate company. If you want to learn more about how McDonald's is actually a real estate company, then I highly recommend checking out the movie The Founder. It will explain that concept in more detail. So the next type of moat is a switching moat. So just imagine if you're an Apple iPhone user, imagine how hard and difficult it will be to exit the ecosystem and move to Android, or vice versa from moving from Android to Apple. What these companies have done is made it an absolute nightmare to change. So once you're in the ecosystem, it's highly unlikely you will leave. The next moat, which is really important for us to understand, is money itself. Like the more money you have, the stronger you are. There's no doubt about it. Because money in the world of business is kind of like your oxygen. It's like your lifeline. It's like your energy. The more money a company has, then the better their economies of scale, meaning they can become more efficient and drop prices. So as an example, I used to work as a store manager at a Nando's store. So what Nando's does and other franchises similar to Nando's is they go to the suppliers and they say, we have all of these stores. We're going to order like a gazillion chickens from you. Like, what is the best price you can do for us? So they have so much power to negotiate the price lower because they're going to be buying in such large quantities. So if I can remember correctly, like we used to get the highest quality chickens, which were the largest and the free range ones for like, I think it was like less than $5. So sadly, compare that to your local chicken shop. There's no way that they can negotiate such a good deal. So they're going to have larger costs than what we had. So hopefully you're getting a good understanding of why moats are so important in the world of business and investing. If you have found this video helpful, please leave a like. It helps out the channel and I truly appreciate it. But before we go, we've got a bonus piece of knowledge, and that is barrier to entry. This is like the close cousin to moats. So to think about barrier to entry, think about like all the financial gurus online. Every time they're marketing whatever they're selling, they're saying like, oh, it's so easy to get into. Oh, it's going to be so easy to make money. Oh, you don't need to work that hard. Whenever I hear that, I personally get really scared because I'm thinking there is no barrier to entry. There is nothing. There's like no hurdle to jump over. And when something is so easy to get into, it usually turns out to be a race down towards the bottom because there's just so much competition because it is easy. Now, the classic example which comes to mind is good old drop shipping. Now, there's nothing wrong with drop shipping itself. It's pretty decent, but you just got to understand there is very little barrier to entry. And so it is generally a race towards the bottom, because whatever product you have, then other people are likely to copy that product. And then it becomes a battle between dropping prices, who can drop the most. And then eventually your margins just get reduced so small, and eventually companies tend to die. And if you look at any of the successful dropshipping companies, what they've actually done is applied moats to their business, and that's why they're successful today. All right, guys, that wraps up today's video. Please remember to like, comment, and subscribe, and I'll see you in the next video.